Okay, we can start. Good afternoon, everyone. Assalamualaikum warahmatullahi wabarakatuh. And the honorable speaker for today guest lecture, Professor Fang Zhuangxi from Huazhong University of Technology. Our moderator for today, Bapak Faisal Fadli, and all participants for today guest lecture. This guest lecture is one of the series from Department of Economics, in which today Professor Fang will present about the policy regulation. Does it effective or not to the housing market in China? And today's guest lecture will be moderated by Pak Faisal Fadli, one of our lecturer in Department of Economics and Business. Without further ado, let's continue with our next session, in which this discussion will be moderated by Bapak Faisal. The stage is yours, Pak Faisal.
Okay, thank you, Mas Kirin. Well, first of all, let me introduce myself. My name is Faisal Fadli. I will be the moderator of today's guest lecture. I'm very pleased to see you here, as in virtually, and welcome all of you to this guest lecture. Today's guest lecture, like Mas Kirin has said, is about the policy regulation, effective or not, to the housing market in China. Why do we want to discuss this topic? Because as we all know, the housing market bubble has become a trending topic in China nowadays, as well as internationally. Well, guys, our speaker today is like Mr. Kirin has introduced. She is Professor Fang Zhuangzhi. Let me share her CV on the screen first and read it for you all. Wait a moment. Okay, Professor Fang Zhuangzhi is one of the lecturer from Huazhong University of Science and Technology. Her academic degree in PhD in Economic. Her academic area is international finance, especially for real estate finance and investment, as well as behavioral finance. And she is also teach international finance, especially for financial market and financial institution, as well as real estate finance and investment. She was graduated from Huazhong University of Science and Technology 2004. Got her PhD in economics, 1995 in master, and bachelor in 1989. She has a lot of experience. The new one is for visiting scholar at the Kelley School of Business in Indiana University as Bloomington. And she also has a lot of research paper, especially published in WOS, World of Science, especially in social science, if I'm not wrong, and also have a lot of working paper here. So that's all for the CVs, Professor Fang's CVs. And then before the presentation begin, let me inform how the presentation will be going on. First of all, Professor Fang will be invited to present the material, and then after that, there will be a question and answer session, and followed by a conclusion. Or if Professor Fang allowed, you can ask her in the middle of her presentation, or write it in the chat column, and I will read it for you. Now, allow me to welcome the speaker, Professor Fang Zhuangzhi, to deliver his presentation. Professor Fang, the screen is yours.
Thank you. So let me show screen. So I'm glad that this is the second time to present to you, and also talking about housing market in China. And this time, I will show you policy regulation efficiency or not efficiency to housing market in China. So the answers you will get after the presentation, I think that. So this is the outline of my presentation today. So at the beginning, I will introduce the situation of our housing market in China today, and the policy regulation. Now the central government presented, and also I will review the development of housing market and the policies regulation in China in the past several decades. So I distributed the time, the stage into six. So from 1949 to 1977. So these days, October the 1st is our National Day, and also this year is the anniversary of our university of its 70 years. 70 years. So so after liberation from 1949 to 1977, so in that period, so our housing market was highly administrated by the government. So the second stage was 1978 to 1997. At that time, the government guided, and the market operated gradually, as we have known that the openness and the reform of our country from 1978. So this is the key stage, and from 1998 to 2016, this is the third stage, and it's very, very important and the key stage to Chinese housing market, because in 1998, the government launched housing monetization reform, and housing market's price from that time was soaring fast, soaring very, very fast. And from 2012 to 2019, so in this stage, I will give you an empirical test we have done to you. So we searched data from from Shanghai housing market, and we do some empirical test to test the efficiency of the market under the policy regulation. Because of the pandemic, so we have known that from 2020 to 2021. So in that year, during 1 year, the housing market in China was under the lower lower, so was under the lower, and the prices of housing market was stable. The increase is very little. So it was very different from the from that of developed countries like the US. So we know that after pandemic, the prices of real estate market was very higher in the US, but it was different in China. And this year, yes, as all have known that a lot of things occurred. It is uncertain to the whole world. But in China, in order to stimulate the housing market, so recently the government also launched a series of policy regulation, and in order to get the higher growth of economy, relatively higher. So this is the outline of today's presentation. So yes, as we all have known that great changes have taken place in the world since the beginning of 2022. But one thing is certain: the growth of the economy in the world is slowed down, especially China's lower growth. So from this figure, we have known that because of slowing China and rising food prices. So this affected the other countries' growth of economy, because China's growth of economy has spoil effects to the other country. So and we can see that on the left of this figure, it shows the spillovers from lower growth in China, and yes, especially to South Korea. So China's economy has great effects to South Korea. So and in housing market, we also know from this figure that real residential property prices in selected emerging Asian countries. Here we see that China, India, Indonesia, Korea, and Thailand, and the red curve shows the China's residential property prices, and we see that so in the past quarter of this year, the prices was reduced in China, and compared to the developed country, the US and European country, Asian countries, and cited here, these countries' prices are relatively lower. In the past decades, we have known that China's growth is remarkable. while it is always complying with the development of the housing market. That is to say, in the past 2 or 3 decades, the growth of economy, so the development of housing market in China supported the growth of economy of China. But this year, in 2022, the situation is very difficult and very different. Not only sales and investment of housing, but also housing financing and the individuals' willingness to buy housing were very lower or very lower. So this figure shows the trend of housing sales volume and areas in China, and we see that in June this year, the sales areas decreased to 22.2%. So this shows the yellow curve. Yellow curve here. So sales areas decreased, and also sales volume also decreased to 28.9%, and the blue curve shows this trend. And this is the trend of investment in China in the half past year in 2022, and we see the blue curve is downwards, and the increase, the investment of increase was negative, 5.4% negative. And also about the finance, about the enterprises and developers finance. So here we can see the trend of financing to the developers. Also from this curve, blue curve, we can see that it was downwards. And the increase rate was also negative. And it shows at 25, negative at 25.3%. And from the participants or from the individuals of this market, we know that the prosperity index of housing market in China in the past half past year in 2022, we also know that this blue curve shows the increase rate was down, and this blue curve also was downwards, and from the consumers or investors, we know that from this figure, we know the willingness to buy housing. So unfortunately, the willingness is not very high. So here we classify different types of cities in China. First tier, second tier, third and fourth tier, and smaller towns. First tier. So different types of cities in China. Usually we classified according to the population, the total GDP of the city, and the in infrastructure in the city. Sometimes we classified according to those factors. And first tier cities usually refers to Beijing, Shanghai, Shenzhen, and Guangzhou city. And other cities usually those large capital city of province, like Wuhan. Wuhan usually considered as is usually considered as second tier cities. So we classify different types of cities, and we can see from this figure that the red bar stands for higher willingness to purchase housing, and the dark green bar shows no change to willingness, no change of willingness to buy housing, and the light green bar shows the lower willingness to buy housing, and the yellow shows uncertain. It's uncertain. So to buy or not to buy housing is uncertain. So all those data or percentage compares to the last months. So here we can see in first tier cities compares to May in this year, in June. So yes, the higher willingness, but in second tier cities and second tier cities, yes, the changes show a little, but it is not very well. The situation is relatively worse in third and fourth tier and smaller towns, cities, smaller cities and smaller towns in China. So this is the willingness to buy housing in China in the half past this year, and in short, the willingness of buying housing was not very higher than in the past year. So this year, in the world, with the conflict of Russia and Ukraine, energy crisis, and along with the pandemic, the supply chain was destroyed, and it leads higher inflation almost all over the world. But things is a little different in China. Though in China, we almost do not feel higher inflation. We almost do not feel the increased prices. Business seems not boom. How to stimulate consumption and expenditure so as to achieve the 5.5% growth? So 5.5% growth is the target of the macroeconomy in China this year, because in the beginning of this year, the government, our primarily announced that we expected to get 5.5% growth of economy. So in order to achieve the goal, so how to stimulus consumption and expenditure? Could we still rely on the housing market? If it could be, how to regulate this market? Are those policy regulations effective to the housing market? So that is to say, do we rely on the same policy regulations like before to stimulate the housing market in order to get the goal of our growth economy? So actually, in the half past of 2022, about 180 cities reduced down payment and compensated for purchasing housing. Other items like to loosen mortgage loan limit, including the government decided to reduce the mortgage rate again to improve the expenditure of housing. So in fact, recently, our mortgage rate has been reduced in the past a week ago. So, and in the meantime, the local government inspired developers to bid land. So recently, housing or real estate developers would not like to bid land because the response of the housing market, especially the buyers are not enthusiasm to buying. So that's why developers would not like to bid the land. But recently, we noticed that the local governments inspired developers, especially state-owned developers, to bid the land. The frequency of various policy release was introduced about 500 times. Yes, this is the times of policy regulations launched this year. From January to June, we had about 5 times to regulate this market, and we can see from this figure that in May, the government gave many times, about 158 times to regulate housing market in order to give the confidence to this market. And this is also about the policy release in different types of city during from January to June, and also see here green shows the first Thai cities, and the red bar shows the second Thai cities. So compared to the first-tier cities, yes, we can see from this figure that yes, the exposure of housing market focused on third and fourth tier cities, also some second tier cities. So the first tier cities, I think that it is safer enough. It is safe enough. It is safe enough because the demand of housing in Beijing, in Shanghai, in Shenzhen is very large. It's very large, and the population is so large, and the demand is so large, and in the first-tier cities, the housing market is sensitive to the regulation of policy. But on the other hand, in second-tier cities, especially in third and fourth-tier cities, so those cities are not sensitive to the regulation of policy, and the inventory of housing were large, and the demand of housing compares to the first-tier cities are very lower. So those are exposure to this market. So obviously, third-tier and fourth-tier cities, including some second-tier cities, are in the exposure, while the first-tier cities are relatively safe enough because of their higher demand of residents and their concentration of younger population as well as business. So moreover, the housing markets in those third or fourth-tier cities, even some second-tier cities, are not sensitive to the policy regulations. So this is the government. So this is what the government worries about. That's why the government thought it is more important for the stability of housing market, since it is too large not to crash. Yes, it is too large. So because we can see that the value of China's housing market, so this figure shows the value of housing market in China in 2020. So the value is very larger, than the US, than that of Japan, than that of UK, France, and Germany. And here we can see that China's housing market value was about 6,260 billion dollars. So it's very larger than it's very great larger than the US, than the lot of US. So here blue bar shows the housing value. But on the other hand, the value of stock market and bond market compares to the US. So China's lower value are lower than the US. So this is very different. So that's why housing market, the value of housing market in China is so large that it didn't permit to crash. So, but this year, whether is policy regulation effective or not to the housing market, this is the government cares about, and also individuals in this market, or Chinese people care about. We will review each important stage of the policy regulation in China, and we will find the answers. So the first stage is from 1949 to 1977. During this period, 90% of housing were provided by the government, and the housing as a kind of welfare distributed to citizens. The government administrated the housing market. The whole family lived in a very small area, usually occupied 8 to 10 square meters. So this is in the in urban areas. In countryside, so in countryside, because countryside people had their own houses, so they so these policies would not affect it on them, but in the city, in urban areas, usually one family could occupy 8 to 10 square meters. So I remember when I was young, I lived on campus in this university, and the university distributed little apartment. So today, like dormitory, like an apartment, a room. The students, so usually 4 students live in one room in our university. So at that time, a family usually occupied a room like that of today, of students' dormitory. So, however, that was under the system of planned economy. In some extent, this welfare supply of housing was satisfied individuals at that time. Yes. So since the production, because the production or productivity in that time was the primary issue, and the living, the housing is the second or third or fourth issue to the government. So afterward, people did not think of possessing their own housing at that time, because that's under the planned economy system. In 1978, Chinese economy began to open to the world, and the economic system began to be reformed, and it was open in China in this period of time, and the system of welfare housing was reformed in 1987. That means in the future, individuals would not be provided housing as welfare gradually. It needed to purchase in the market. The government launched housing. Provident fund system in the first time in Shanghai in 1994, and spreading to the whole nation at that time. So the government emphasized the policy of supplying to security and affordable housing during this period. The mechanism of market began to operate gradually, but during this period of time, from 1978 to 1997, individuals, citizens in China still did not note it at all. We didn't have, so we were not aware of the reform or the changes of system of housing supply. But from 1998 to 2016, 1998, this is the very important year in the history of development of China's housing market. Is very important year. So this year was the reversal point of housing market in China, since it is 1998 that the government launched an important policy regulation enabled housing monetization. That means welfare housing became the historical thing, and the government tried to set up the system of housing financial system based on the housing provident fund and the commercial credit to motivate the housing market. This was one aspect, because all units, all people, especially in urban areas and cities, the government stopped welfare system to housing. This is the first. And the second, we know that in 1997, the Asian financial crisis broke out. And no matter how, this also had a little bit influence on China, although it seemed that compared to other nations like South Korea, like Indonesia, like Malaysia, Thailand, China was impacted a little, but in fact, it also influenced the market of China. And in domestic, we were facing the serious flooding in main provinces at that time. So the housing market was considered as economic growth point by the government because of Asian financial crisis, because of the domestic problem. So the government decided to make the housing market, to develop the housing market, and considered it as a growth of the growth point of the economy. Moreover, only the policy of housing monetization did eventually alter the perception and behaviors of the individuals. To the housing market. From now on, individuals were so sensitive to the housing market that this market was fulfilling emotions and sentiments such as greed, fear, and panic. This is the second reason. The third, in this period of time, large scale of urbanization in China concentrated resources to the towns and the cities, especially the people were flocking to the first-tier cities and the capital cities where they began to be rebuilt and could be able to attract more and more capital flow with much more opportunities because of the urbanization also during this period of time. To develop housing market, so it is necessary. It is necessary, and it is available to develop housing markets, and also it is available and necessary to consider housing market as the growth of economy point. So all those factors created large demand of housing, especially in the large first-tier cities like Beijing, Shanghai, and Shenzhen. That's why today we see that the highest prices of housing in those cities. Once regarding the housing market as a pillar industry, with the urbanization, you could imagine it developed more and more larger, and the housing price was soaring with the higher ratio of housing price to income. After 2003, great investment, credit crunch, easy monetary policy, and the lower holding cost of housing. Yes, many factors. And this figure shows the housing investment from 2008 through 2019. In 2019, about 9,707 billion yuan. Yes, it's a large investment, and we can see from this figure the blue curve is upward from 2008 to 2019. Before the pandemic, the investment to the housing market in China, it got to the peak. And this is the newly opened areas during 2010 to 2019. So here we can also see that from 2010 to 2019, yes, the newly open areas was increasing. Only in 2014 was relatively lower, but before the pandemic in 2019, yes, also the newly started area was to the highest, was to the peak. And this is the complicated figure. So don't worry, I will explain. Yes. So here, from this figure, we can see that dashed line reflects the rise trend of the housing prices. Those description in Chinese language, show or reflect the regulation of policy in different year. So this figure shows the situation of Chinese housing market from 2002 to 2016, and during this period of time, we had a series of regulation policies, and those description in Chinese in this figure shows the regulation policy. So those description in Chinese reflect the policies in different time. Solid line, so in this figure, the solid line showed the ratio of price to income, and tier 2016, we have seen that we see that this ratio was over 30, over 30. Is very big, is bigger than that of in the US and any other country. So the ratio of price to income. So price refers to housing price. So the ratio of price to income in the world, in China, is the highest one. So in 2003, yes, in this figure, the government announced the housing market was the pillar industry. So after the policy, after this policy presented in this market, so the housing market responded quickly, and we see that from -9 in this year, this curve run the highest, run the peak. So here, so this is a good policy. This is a good news policy in 2003, and also we find that from 2004 to 2008, so in these 4 years, the price decreased. The price of housing market decreased because of the policy regulated land. So during 2004 to 2008, the government regulated this market. The government launched policy of land. So the use of land, or the developers had little opportunity to build land because the government regulated the land of use, and also credit and tax, including limited purchasing. So that means during 2004 to 2008, the government limited purchasing housing, limited credit, limited use of land. So that's why the dash line, the dash curve in this figure was down compared to that of in 2003. But in 2009, in order to deal with the financial crisis, because in 2008, we have known that the financial crisis occurred in the world, from the US to the world. So in order to deal with the financial crisis, so in China, in 2009, the government gave easy monetary policy, and also we observed housing market. So we observed that the price the prices of housing market in China at this moment went up. So here we can see from this figure dashed curve. So dashed curve in 2009, it climbed. It climbed also at the top. Climbed, and the curve upwards. So, but unfortunately, in 2010 through 2014, the government reinforced the purchasing limit again. Why? Because the prices, because the prices went up faster and faster, went up higher, went up at a new record, So that's why during 2010 to 2014, the government reinforced the purchasing limit again, and yes, we see the dashed curve. Went down again. With the higher price of 2015. In 2016, the government announced a supply side reform and the related inventory of housing. So houses are for living, not to speculation. This is the very important. This was the very important policy regulation in China from 2016 till now. So this figure shows the up and down of housing market, and up and down with the policy regulation. So during 1998 to 2018, so a lot of things in housing market in China, and yes, during this period, the prices of housing market climbed the highest. So in 20 years, the average housing price from 1,854 yuan per square meters increased to 8,542 yuan per square meters. So this is an average prices of housing market in China. In first tier cities, usually the average prices yes 30,000, about 30,000 yuan per square meters. So while the balance of individual mortgage in the past 13 years increased from 1,600 billion yuan to 21,900 billion yuan. So increased 13.7 times. So you can imagine the sales of Vanke. So Vanke is also one of the largest developers in China. So the sales of Vanke exceeded 100 billion yuan in 2010, and it became the largest developers in the world in that year. Only 6 years later, Vanke, Evergrande, Country Garden. So these 3 developers are the largest developers in China, and we also know Evergrande. Yes, in last year it had financial crisis. So their sales were all broke through 300 billion yuan, while in 2017 the sales were over 500 billion yuan. That's a great number. That's a large number. So you can imagine the volume, the scale of housing market in China. So this figure shows the average living areas in the world. The average living areas in the world, and in China. So yes, in the past decades, our living areas were changed a lot. We lived well. We have to admit that we lived well, and we are glad that our living areas are becoming larger, and the target of the government, the living area, the average living area, the target of the government is to let everyone live in about 30 square meters, 30 square meters. So now, today, in urban areas, the average living area in China is about 25 per square meters. So in somehow we realize our target. So in the US, the average living areas is about 65 square meters, and also in United Kingdom is about 50. So to the large population in China, we can live in a relatively large living area in 20 years. I think that this is very important, and this is not very easy to other countries. So from this point, I think that in the past 20 years, the development of housing market supported the living standard of our life, and the housing market contributed to the economy, to the living of our life, So this is the average living areas of China, and on the other hand, this figure shows that in the past 20 years, from 1998 to 2019, the family, the ratio of housing assets in the family in China was increased. So this shows in 2020, compared to the other nations in China, the housing asset as the primary asset, primary wealth in the family. So in 2020, housing asset in the family is the average percentage is about 61.8%. 61.8%. So that is to say, in Chinese family, their wealth composed of almost or just housing or apartment. Financial assets just was just a very small in the family. So today in China, the average in the family, the average wealth is mostly is housing, and also one family average has 1.2 suite of housing. So this is the wealth of the family in China. So at the end of 2017, there were 274 million suites apartments in the urban and the town, in China, and the talent ratio was 1.09. So so this figure, this number shows that the demand and supply were equilibrium in China. So the demand and supply of housing were equilibrium in China from this number 1.09. Our dwelling condition was improved much more than before. Yes, we lived well. We lived in a relatively large area today. So the housing market was sensitive to the policy in the past 20 years. From 1998 to 2019. So in the whole, we can see that the housing market was sensitive to the regulation of policy. However, we also, from this number 1.09, this ratio also shows an average. And we can see that actually in the first tier cities, this ratio was 0.97. But in the third tier cities, the ratio was 1.12. That was the reason why the government tended to get rid of inventory in the third-tier cities, because this ratio reflected the demand and the supply of housing. The demand and the supply of the housing. If this number is bigger, that reflected that the supply of housing is over the demand of housing. On the other hand, otherwise, this ratio is smaller, like such as under one, like in the first-tier cities, 0.97. This reflected that the demand of housing is exceed the supply of housing. That's why the demand of housing in Beijing, Shanghai is very higher, and the supply is short. The supply is short. That's why the regulation of policy in the first-tier cities are sensitive. So with the higher and higher price of housing market, there were always about the bubble in housing market. Even if under the regulation of destocking of housing, especially the policy called houses are for living, not to speculation. So in 2018, the policy of financing contracted, and the government launched out long-term mechanism aimed at stable land price, stable house price, and stable expectation. So also these regulations are important to this market. So in August 2020, we know that the Central Bank of China and the China Banking Regulatory Commission presented 3 red lines, which was the regulation of supervising real estate enterprises financing. So those are tight. Those are very tight policies to this market. So no matter how, the policies after 2016 to 2019 were correct. Given that reasons such as land finance of the local government, banking financial crisis, development cost, the increased population of urban and the land resources is limited, and so on. So therefore, it is not surprised that the price was still increasing, because we observed that though the government, the authority presented a series of regulations to this market, like red lines are 3 red lines. Houses are living in without to speculation, and other limitation to purchase housing. The prices of housing market was still rising very fast, rising very fast, especially during 2016 to 2019. So afterward, the individual's reaction to the policy is either under or over. Yes, because before 1998, individuals didn't react to the policy, because at that time, the policy, the regulation inspired individuals to buy housing. But at that time, individuals' response to the market were underreacted. But from 1998 to 2019, in these 20 years, individuals were aware of this market, and this market was fulfilling sentiments, emotions of great panic and fear. Individuals will all fear of the higher prices, will all fear of someday they couldn't have ability to buy housing. So they are crazy. They were crazy to buy housing. So that's why one family usually bought 2 and 3 or a lot of suites of housing. So during this period, during 1998 to 2019, during those 20 years, individuals in this market were crazy. They reacted. Their response to this market were overreacted. So nevertheless, we would like to test the impact of the policy. So no matter how the changes of this market fulfilling with emotions and sentiments, and the prices was opened up. So we wanted to know whether it had bubbles or not, and we wanted to know the effectiveness of the regulation of policy. So in order to test this market, in order to test the period of this market's reaction to the regulation of policy, we did an empirical test from Shanghai housing market. So there are a lot of references. On the bubble and the effect of policies, but no study has examined how the irrational part of property price movements happened. In stock market, we can find a lot of references to do this from the behaviors from the irrational behaviors of the stock market, but in the housing market, less references focused on the irrational behaviors of this market. Also, no study has employed the TVP-SVAR model to explore the associations among housing market sentiment, liquidity, and housing bubbles. So we adopted a more suitable and comprehensive approach to investigate the time-varying relationships among these three variables in Shanghai housing market. In addition, based on monthly data from China's macroeconomy and the Shanghai housing market from January 2012 to December 2018, we construct a housing investor composite sentiment index by partial least square method and examine the long-run relationship between economic fundamentals and the real housing prices so as to predict housing prices in equilibrium. The deviation of the real housing prices from which was regarded as the housing bubbles in the research. So this is the intention of our study. Our study has extended prior literature in the following two respects. Firstly, we explored the time varying relationships among housing market sentiment, liquidity, and housing bubbles. And then we prefer more robust political and investment suggestions. So secondly, we examined the transmission channel of sentiment by taking a closer look at how it influences liquidity and eventually affect housing prices, so as to shed light on the mechanism of housing price movements. So in order to test those markets in Shanghai, we designed research variables. So we selected these three variables: housing market sentiment index, market liquidity, and housing bubbles. And we use TVP-SV. So we use a complicated model to disclose to investigate these three variables, the relationship between these three variables. So we design these three variables. So how to measure each variable to housing market sentiment index? Because it includes 4 proxies, namely new house construction. That means new housing construction. We use this proxy, which is defined as the ratio between the newly opened housing construction area and the average newly released residential land supply area in the past 6 months. Because it can reflect real estate developers' response to the sentiment driven by both resident and investment demands, which is theoretically positively related with housing market sentiment. So that's why we use this proxy measured as market sentiment. This is the first. And the second proxy is housing inventory, which is defined as the ratio between the investment in the housing sector and the total investment in the real estate sector. This indicator can show developers' attitude to market sentiment. So this shows the developers' attitude to the market sentiment. But new housing construction, this proxy shows the housing market sentiment. So the third proxy is sale. Yes, the sales of housing. So which is defined as the ratio between total area of transacted houses and the whole area of houses available for transaction. So here we use sale probably. So probability. So which is defined as the ratio between total area of transacted houses and the whole area of houses available for transaction. The fourth proxy is liquidity, which is defined as the ratio between the number of transacted commercial housing in the current period and the number of completed buildings in previous 3 years. So yes, firstly, we standardize each raw sentiment proxy variable so that their mean is 0 and the standard deviation is 1. Secondly, in order to eliminate the influence of business cycle variation on the proxies, we regress each standardized sentiment proxies on our 8 chosen economic fundamental variables to obtain the residues. Yes, we use this 4 proxies variables and consider another 8 variables to do regulation, and we want to get the sentimental index of housing market. So those 8 economic fundamental variables include the purchasing managers index, the growth in industrial output value above designated size in Shanghai, the profit margin of the real estate industry in the last calendar year, the growth rate of consumer price index. Number 5 is the growth rate of M2, the ratio between the domestic loans of the real estate industry. And the 6 is the total investment of the real estate industry. The yield the yield spread between AA grade and 3A grade corporate bonds, the interest rate difference between above 5-year lows and 6 months lows. So from the regulation, we through those 4 proxies to these 8 fundamental variables, we do a regulation, and finally we get the sentiment index in need in this research. So here I do not put the results and the process here, because that was a complicated processing. So I just describe the thought, the methodology of our empirical test here. The second variables in our test is the housing market liquidity in months. So we in month T can be expressed as this equation. So well, NT is the number of sold housing units in month T, and house T minus I is the number of completed residential units in year T minus I. The larger of value of liquidity YT is, the higher the market liquidity would be. So we use these variables to reflect the liquidity of this market, and we measure like this equation. And bubbles. So bubbles, yes, we a lot of references to bubbles, and a lot of methods or measurement to bubbles. So we select disposable income of urban households, local GDP, Shanghai stock price index, and vacant areas of new dwellings as our economic fundamental proxies to predict the housing prices in equilibrium. Because here, yes, in our research, we also have a process to measure, to disclose the bubbles. So here, I omitted it. Then the foreign regulation has been performed to explore the long-run relationship between housing prices and the economic fundamental proxies. So we use this equation where PH denotes the housing prices, L is the lag factor, and Z presents the vector of exogenous variables. So exogenous variables, sometimes here we think of regulation of policies. And so in order to test the stability of these variables, we use ADF tests. ADF tests have been performed to examine the stationarity of the 3 variables. That means we use ADF to test the stability of these 3 variables: sentiment, sentiments index, liquidity of housing market, and bubbles and bubbles. So bubbles we defined as the devaluation of the fundamental prices, So we found that the raw series of liquidity and housing bubble are non-stationary. Thus, we further tested their first order difference series, both of which are stationary at the 1% significance level at this time. Hence, the requirements of our foreign TVP SVAR analysis have been met. So we use this model to investigate the relationships between sentiment index, sentiment, liquidity, and the bubbles. So this is a little complicated model because it can test the dynamic relationship between these three variables. So that's why we use this model to investigate. The TVP SVAR model is chosen for our empirical part, which is a multivariate time series model whose coefficients and innovation variance covariance metrics are all time varying. That means is a dynamic process testing. So I omit the process here, and also equations and metrics. So variance, covariance metrics I omitted here. I just gave the results to you. We investigate the time varying relationships among sentiment, liquidity, and housing bubble in Shanghai housing market. One of the most, so Shanghai housing market is one of the most vigorous markets in China. That's why we choose this market to test. So our findings support previous regulation policies for Shanghai housing market, because just now I spent time to explain regulation policies in different time, in different year. Yes, in the past 20 years, the government launched a series of policies to this market, and we can observe that after each regulation to this market, the prices of this market seemed increased slower. But once the regulation was easy, the market, the housing market, the prices rebounded again, and climbed higher prices than the previous. But one thing we can see, bubbles are covered, bubbles are covered by the regulations. So from the empirical test, we find that a series previous regulation policies of the government seemed effective to this market, because from Shanghai housing market, firstly, Shanghai, we find that Shanghai has been experiencing housing price bubbles to some extent. Yes, in 2014, in 2016, and in 20 and 9, yes, in those years, Shanghai's housing market experienced bubbles, and also we found that at that time, the regulations of policy of the government lodged in that time. So moreover, a significant time varying relationship among housing market sentiment, market liquidity, and housing bubbles can be spotted. In line with our theoretical analysis, evidences affirm that enthusiasm or emotions in the market is usually accompanied by an increase of liquidity and a period of bubbles in the short run, suggesting that housing bubbles can highly possibly boil down to optimistic sentiment. Yes. However, housing return gains would decrease after a period, implying that stakeholders have been more cautious and finally reach zero over a long horizon, meaning that the market has returned to be rational. And in the meantime, once the market tend to rational, we find that that happened to the regulation of the government. So at the same time, sentiment exert a yearly decline influence on liquidity. So liquidity somehow reflects the sentiment or emotion of this market. While we also find that the regulation policy happened to the public at this moment previously. It means that the effectiveness of the regulatory policies in Shanghai housing market can be detected. That is, the housing bubbles in Shanghai has been effectively controlled. So that's why we called the bubbles covered by the regulation. That means this market in Shanghai. So housing market in Shanghai was sensitive to the policies. So compared to the smaller town markets, compared to the second, third, fourth tier cities market, the first tier cities market are safe enough. So the government doesn't worry about the developed housing market in China. So they worried about very much about the third, fourth tier cities market in China. So they are exposure. And secondly, in the short term, high-level liquidity usually drives up housing bubbles. But in the long term, with housing market stakeholders returning to be rational, the real estate prices will gradually revert to their intrinsic value. Plus, the response magnitude of housing bubble to liquidity is huge than it to market sentiment. This is perhaps because liquidity can partly conduct the effect of sentiment on housing bubbles with magnification. So this is the result of our research. So come back to the housing market now. So this year, during 2020 to 2021, on one side of the pandemic, the demand of purchasable housing was limited in China. On the other hand, the capital flow to the housing market are regulated because from the analysis of previous, we know that in China housing market, especially we should note the stage from 1998 to 2019. In those 20 years, the prices of housing markets went up to the highest in 2019, before the pandemic. So because of the pandemic and the reinforced regulation of the government, we observed that during 2020 to 2021, the housing market was calm, and the prices of the market, were increased very little. And the investment of housing market during this year was reduced. One reason is pandemic. The other main reason is the capital flow to the housing market are limited. So, and those smaller firms, smaller enterprises were lack of capital, and their finance were very, very narrow. Their finance channels were very, very narrow. In order to survive, they have to tend to private finance, but that is very, very difficult. So this figure shows the shows this year 2020 to 2021. So reinforced policy regulation plus less capital flow plus pandemic. So that's why the housing market in China in this year was calm. But on the other hand, in the US, during this year, the housing market was booming in the US. It's different. So the left on the left hand, this figure shows the increase of investment during 2020 to 2021. Yes, in the past year, the increase of investment in housing market, we can see that the curve, the blue curve, is downward. And this year, so during last year till now, especially we notice the half past of this year, the blue curve also is downwards, and the increase of investment in housing market is negative percentage, negative 5.4%. So it's very lower, very lower than last year, than the year in the past. So that's why the government began to worry about, much more, worry about especially small towns, the third and fourth tier cities market, and some second tier cities. So recently, the central government continued to reduce the deposit and the credit interest rate by easy monetary policy, and with the government tries to loosen the regulation of purchase housing and some taxes to the housing market carefully in order to maintain the market healthy. So they worried about the exposure of this market, because this market, the value of housing market is so large, and it occupies large amount of capital, and those capital were load from the commercial banks. So once the exposure of housing market breaks out, maybe the financial crisis, especially banking system, will be crushed. So so this is the so that's why recently we observed that the easy policies, a series of easy policies, the Chinese government launched to the market. So in short, the regulations are focused on. So recently, a series of regulation policies are focused on market and expectation stability. So all regulations focused on, or in order to keep housing market stable, and to give the market more confidence gave the market more confidence. So to keep the expectation stability. And the second, a series of regulation intends to promote the investment, because we observed that in the past 2 years, especially this year, the investment of this market or investment of other areas, other fields, were all reduced. So many investing to affordable housing and rental housing. So different from previous regulations, like during 1998 to 2019. This year, the government promotes to invest to affordable housing and rental housing, not commercial commodity housing, not commodity housing. That is different from past 20 years. The third is that the government intended to launch a series of regulations to expand financing, inspiring equity and bond financing, including asset-backed securitization, acquisition such as financial institutes, enterprises which needed capital. So this also are different from the past 20 years. On one hand, it can inject the innovation of the enterprises, especially those smaller enterprises. On the other hand, through various financing channels, that can expand the scale of capital markets, financial markets in China. So compared to housing market, compared to the value of housing market, the capital market, the stock market, the stock market in China is very narrow. So the stock and the bond markets in China will expand in the future. So this the development of capital or financial markets, it needs it needs a lot of financial instruments created. So that's why the government inspire enterprises or financial institutes acquisition and Merck also change the traditional financial methods to stock market or bond market. So all these regulations are effective or not. So through the experienced development of this market, of housing market, regulation policy in China, we know that it is powerful. It is powerful. So we review the development of housing market in China from 1949 to 1978. This is the first stage, and the second stage from the openness of economy of China. The second stage from 1978 to 1997. So this is the second stage. So the third stage is the most important, most key, most important to Chinese economy. And in the past 20 years, the higher growth of economy in some extent supported by the housing market. So this third stage from 1998 to 2019, yes, before the pandemic, is the most stage of housing market in China. And our urbanization, urbanization and industry and a lot of things we achieved in the past 20 years. But after 2019, yes, because of the pandemic, things are changed, not to China, but also to the whole world. And on the other hand, the world, the changes in the world also will affects China's market. So, is it effective to the market? The Chinese, the government regulation policy to the market is effective or not? We have our own answers. I think that to you, maybe you have your own answers. No matter how, according to the experiences in the past, regulation policy in China is powerful. So we will always watch the market carefully. So at last, thank you so much to listen to me. And today is National Day of our country, and the anniversary of our university for 70 years. So this is the university of our this is our university. Move forward with the Republic progress into a new era, because our university was founded in 1952. So this year, today, it is 70 years. So thank you.
Well, thank you very much, Professor Fang, for giving us such an informative and interesting presentation, especially according to your research. You implement your result here using time variant SVAR, stochastic variation, yes, TVP SVAR SP, and the result is, as I can simplify, this housing market bubble in China only happen in the short run, right? But in the long run, housing market will return to normal as happened in the previous period, right? So this is very interesting result of your research. Well, guys, now come to the question and the answer session. I would like to have 3 questions, please, from participant. You can write down below in the chat or raise your hand to ask your question. Okay, Mas Wisam, please.
Okay, thank you. My name is Wisam Sudesyo Nusantara from Economic Faculty Universitas Brawijaya. Saya masih S1. I'm still have finished yet about bachelor degree in UB. So I just want to ask you about what kind of policy maybe in China which can be implemented in Indonesia, because I think in Indonesia the main problem of housing market is, I'm so sorry, there are a lot of capitalism here which can be dapat dilihat dari ketimpangan itu, disparity. Yeah, so a lot of people here who have a lot of money have buy a lot of land, lot of house, to monopolize. So I think there are a lot of government policies implement here. It's not really effective. It makes the housing price in Indonesia is increased high really fast, no matter how condition about economic, how condition about I think about war. Ya, jadi yang ingin saya tanyakan Bapak, kebijakan mana yang bisa atau mungkin layak diterapkan di Indonesia, di mana saya pernah mengikuti beberapa materi dan seminar, berikut juga dari beberapa artikel itu melihat bahwasannya orang Indonesia itu banyak sekali terjadi kapitalisme dan monopoli terhadap sektor perumahan, yang mana kebijakan pemerintah itu tidak sanggup untuk mewadahi atau mengatur agar katakanlah semua rakyat itu punya rumah dengan cara mudah. Ya mungkin ada beberapa kebijakan yang baik, tetapi saya lihat juga rakyat itu melihat harga-harga rumah itu terlalu naik. Ya mungkin benar ada beberapa kredit, cuma sampai-sampai ada surat kabar dan juga beberapa artikel menyebutkan generasi milenial akan sangat sulit mempunyai rumah ke depannya. Ya, kurang lebih itu Bapak. Sebelumnya thank you very much for the professor, dan saya mohon maaf apabila pertanyaan saya mungkin kurang nyambung atau terdapat banyak sekali salah-salah kata atau mungkin interpretasi seperti itu. Kurang lebihnya sekian. Assalamualaikum warahmatullahi wabarakatuh. God bless you.
Okay. Yeah, thank you, Mas Wisam. Okay, actually, he's still in the undergraduate, still not yet received their bachelor study. So he's still struggling in explaining about related question. So I will summarize for you, Professor Fang. So what policy maybe empirically in China can also implement in Indonesia related to the housing market price bubble, like in Shanghai? Maybe what policy can also be implemented in Indonesia, maybe based on your experience in related study in China, maybe. Okay.
I think that this is a very good question. Very good question. Yes. So because of Shanghai's housing market is very large, and is sensitive to the policy regulation, and among those series of policies, I think that to the housing market in Indonesia, the limited purchase of housing is effective to almost all markets. I think that.
Yes, thank you, Professor Fang. I also have the same answer, but in Indonesia, we don't have such a strong leader like in China. And we also use a democratic government, so we can implement the policy as strong like as China did. So if our government prohibit to buy the housing just for investation, not for just for living, it's very hard to implement because we don't have a strong policy to do that. That is our problem here. Create a prohibition for buying a house just for investing. It's very great policy, but we cannot do that in here because our the society, especially for Indonesian society, will reject that policy. That's our problem. We don't have a strong leader like China had.
Yes.
So yeah.
I think that is similar to, yes, it's similar to housing market in China, because in the past 20 years, the housing market was fulfilling emotions, sentiment, like speculation, panicky, fear. So housing, not just for living, it's like a kind of assets, and yes, underlying assets, is underlying assets. So a lot of people invest housing in this market. So that's why the government, the central government, launched regulation policy like houses are for living, not to speculation. Because in China, so we can give policies like this, and some taxes, housing taxes to regulate this market. But about the taxes on housing, still today are discussed. But the policies like houses are for living, not to speculation. This presented by the central government, especially our chairman, so give it. So the market, yes, the market had to respond to it, had to react to it. But in Indonesia, even if this market is full of speculation. The policies of the government, I think that will not have affected on it. So it needs market itself to solve this problem. Like the housing market in Japan. So today, the ratio or the ratio of value of housing market to GDP in China today, this ratio is very higher. Compared to the ratio that of Japan in 1980s. So the ratio of value of housing market compares to GDP. That means value of housing market to GDP, the ratio. So this ratio today in China is very higher. To that of ever in 1980s Japanese market. So we know Japanese housing market was crashed. So usually people worried about whether Chinese housing market like the market in Japan or not. So from the ratio of value to GDP, yes, it's the same. But in China, the policy, the regulation of policy is powerful. Maybe it will change gradually, not burst out in time, burst out very fast. So Indonesia's market, I guess that maybe like housing market in Japan, but we can calculate the ratio of value of housing market to GDP, and we can compare this ratio to other nations. Usually we have a safe ratio. So from the references, I know that the ratio of Indonesia's market seemed not exposure now. Yes. So I think that the supply and the demand of market will adjust this market, because Chinese market in somehow like stock market is a policy, sometimes policy market. Yeah, that's all.
Okay. Yeah, thank you, Professor Pang. Another question? We have one question. One more question from. We have two questions, one from Wissam and one from the other. I don't know. Maybe he or she.
Mr. Tadi Jacob mau tanya. Ya, Jacob.
Okay. Yes. Please, Jacob. Okay,
Yeah.
silakan.
Yeah, thank you, Dr. Pang and our moderator Faisal. So Dr. Pang has really elaborated everything about housing market in China. So, and just touch a part of my question. So to be brief, my question goes like, so what approach or what factors are being considered in China while pricing, or when pricing the housing market to the tenants, and just talk about and what percentage are this housing market to the GDP of China?
Yes, this
Thank you.
ratio. Yes, this is a good question. Yes, the ratio I remember is about 300. Yes, 330. 30%. 30%. About 330. 35%. 35%. So it's very large. Then that of the U.S. market, the United Kingdom. So today, in Japan, its ratio is very lower. Is about 150%. Is about but the ratio of China today is very large. The number is as the same as that of in 1980s in Japan. So if you are interested in, you can you can search or find some information about this, and to calculate from your market. So you can take use of data from Indonesia's housing market to calculate. Just use simple variables like price to income, the ratio of price to income, the ratio of value to GDP, and so on, to measure the exposure of housing market in Indonesia. So it's a good question.
Yes, thank you, Professor Fang. The ratio between the real estate sector or housing market and the GDP in Indonesia is very small, because no one interesting study about that. Only 2.74% something, yeah, below the 3% ratio between the real estate market. With well, is there one more question from you guys? Okay, then, well, guys, we finally come to the end of this guest lecture. Before I close the guest lecture, I would like to take a conclusion from what the speaker has presented. The first one is the housing market is one of the strongest pillar of China's economic growth. And then the second one, that is why the Chinese government makes every effort to prevent the housing market from collapsing. So according to the Professor Fang research, the evidence affirmed that the enthusiasm in the market is usually accompanied by increase of liquidity and period of bubbles in the short run, suggesting that housing bubble here can highly possible boil down to optimistic sentiment. So, however, housing return gain will decrease after a period. So, in the long run, it will be normalized, right, Professor? Yes. Right. Okay. And then the fourth one is about the Chinese government policy regulation are focused on market and expectation stability and promoting the investment, mainly investing to affordable housing and rental housing, and expanding financing, inspiring equity and bond financing, including asset-backed securitization, acquisition, such as financial institute merger, enterprises which needed capital. So according to Professor Fang, as well as her research, conclude every policy implemented by the Chinese government was successful to redeem the housing bubble market. Right. Well, I would like to thanks to the Professor Fang for the informative and interesting presentation, and all the participants for the very active participation. And finally, give the online applause for the speaker and for you all, guys. Thank you, Professor Fang. Again.
Thank you all. Thank you for listening. Thank you.
Yes.
Chào, bye bye.